Dow Jones bearish reversal. We are looking and analyzing the weekly chart as we have. This was the calendar 52-week low. We have all the analysis on the Dow. We enjoyed the rally as it's come up to the top. This was Greece last week. This is Italy today. The Dow Jones, would you like to see the haircut it was? Minus 389 points on the close. That means that what I'm going to show you here and now, I'm showing the Dow Jones composite right here, and what I would like you to see is under the net change, out of all 30 stocks on a net change level, there is only one positive one in here, and that's OSG that has plus. So what I would say that today's Italian debt crisis had caused over 99% of the Dow reversal. This is the weekly chart to it. The 50-week was very bullish. This was the calendar year low that we went through, and boy did we trade these bottoms. This was that great 4-week rally in October, and the bears got taken out of the market, and we got up here to a major topping pattern where we had made those lows. This was the weekly low throughout 211. This was the great rally, the counter volatility upside that we do well, and we enjoyed it. Most of your bulls stayed out, and the professional community once again could not adjust to the worldwide crises, and it's perplexed people. But let me tell you, when markets are in this condition, this is where the best value will be bought in the United States markets moving forward. Not only that, once Italy and the rest of them work their way out in emerging markets and developing countries, remember that part of our forecast was, when do we take control? And what does that mean? And all of our analysis for the last several years of the original financial crisis is that markets never go straight down, but they acted well in 2011, and I can show you right here and right now. We already did this because we were short in that move, and we shorted that move, and we got net long. Once again, we got net long right here off of the bottom. We told everyone that this would be the bottom down here in the shorter term of the calendar year 2011 low. We have rallied straight up. We had some things that were working in our favor. You had some better economic data that they were able to use. You got oversold. You had a multi-year low that was being put in on the Dow. We have all of it for you. Go back and look on stock market funding. This great rally up here, that was a great bull move against the bear. Now the bear is back in control because the bear's got Italy, the bear's got Greece, Portugal, Spain, and the rest of them. It's not new news. Once again, though, it always comes down to, how do I get the move when most of the people sat out? Even the professional community didn't even get in this rally. They always start buying when they're up here. But the thing about it is, folks, is we're going to test a 20-week on the Dow. The rising 10-week is bullish. That's going to be this major support line right here on 11.5, right about there. The thing about it is these tops, these weekly tops right here, these very weekly tops here. Let's just take this part of it. Now, let's just take these tops, these multi-year tops at resistance on the Dow during the 52-week low process, and we traded every single day in them. Upside volatility, downside volatility. This was the greatest rally so far in 2011 off of the bear market low. And the bear market does get upside volatility. Math goes down, math goes up. Right now, the bull side of this trend is that weekly MACD never got to the buy signal. It's getting closer all the time, but it hasn't made it yet. It's still negative. Right now it's negative 56 for this week. As far as the public indicator goes, that the higher this goes, the stronger the pullbacks are. That's all standard stuff, but we use a different system called the SMF Market Maker Trader. And it deciphers all the math and does all the work. And it tells us when to be net long, and it also tells us where we start to weaken up. So this is the calendar 4-week bull rally to a 2-week pullback with Italy and Greece. Spain will be next. Portugal's on deck. We already know. Oh, but you know what? Italy is the third largest economy. And like I said, is how you wait it out. And how we see that you had 1 week, 2 week, 3 week, 4 week, 5 weeks above the rising 10-week. That is more of a bullish then bearish. Now, what happens is you sold through the 50-week right here. You were above it. That's this line. That's 50-week. And technically, yes, you're going to get support here, and you're going to see what happens at this major trend line on the Dow. All Dow stocks were down. 99% of the Dow stocks were down. We have the Greek debt crisis that played the role. Once again, this was down over 400 handles. That's a damaging factor in this overall rally. Once again, we called it before it went up. We called it before it went down. We called how to trade the weekly movements down here. And now do U.S. fund managers want to come off the sideline, remove the Italy problems in the rest of the world, and start buying on valuation in the U.S. and how the forward-looking earnings. Remember, if you want our 2012 analysis as a special private report, send an email to info@stockmarketfunding.com, and we can talk about what that would do. That will outline the whole year of 2012 just for you.